Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After a head-spinning week, the Australian dollar wrapped up on a mixed tone. Having taken a stab at the 65 area, plummeted back towards the key support area of 63, 55, 70 and also held and ended up closing relatively flat. In light of the technical pattern though, we could see another up test that could bring the market up towards 64, 65 for the start of this week. But towards the top side area of 65, 30, 35 still remains and likely to contain the balls of extending further with the 60-day moving average seen above, which is at 65.53. Looking ahead to this week, the market will be looking towards the Australian year-on-year CPI inflation. And along with that, we have the final GDP out of the US and also the Fed's preferred core CPI price index. And wrapping up will be Fed chairman when he gives a speech in Washington, D.C. The euro outlook still remains somewhat heavy after 4 challenging days, closes on a negative candle. In light of the current pattern, though, the market still looks like it's destined to challenge lower and therefore could see a turbulent move down towards the region of 106.15 with the base coming in around 105.15.45. In light of the current pattern though, I feel the market will probably get oversold as we get closer to the bottom side of this range and could see a potential bounce. That would bring the market to a potential or initial target seen at 107.45 to 70. The dollar yen case revives its losses from Thursday and closes on a strong note and close to a Marubozu candle. With the outside range day nearly negated, could see the market push beyond 148.30-35 area and look towards 148.70-75. Meanwhile, the Bank of Japan kept interest rates on hold on Friday at negative 0.1. In view of the actual strength of the pattern of this candle, therefore could see a rise up towards 149.40 to 150, but do be a little bit cautious because the Bank of Japan has said that they will be monitoring currency markets and therefore could see an intervention. That is because previously at this level the market plummeted heavily and therefore with the rumour of the BOJ being in could see a similar price action. Pound now is headed lower and now close to its objective of 122.20.25 and it is holding at this stage. We are extremely oversold in the ADX. It's getting to a overheated area close to 50 like previously we can see here back in July. If we do see a rejection, which I do anticipate, then we could see a move back towards the 124 region. Gold, after a whipsaw price action, stabbed at the top side level and then fell back towards the bottom side of the range around 1,910. The market is still a little bit mixed, but technically though, I still feel the market can actually press lower and therefore look towards the region somewhere around 1,886 to 88 reassess. Wrapping up with oil, well, the market did rebound off that support level, which was at 88.35, and from there closes on a slightly mixed tone. Nevertheless, we're still locked or confined in this 88 to 92 range, but a break of 88 will give further stop losses towards the region of 84. Looking at the technicals though, they are attempting to come back, but still keep an eye because the market still appears to be somewhat heavy, and therefore a break of, as I mentioned, of 88.35 should reinitiate downside target of 84.25 to 85.10. Well, that's a wrap for the start of this week. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the rest of the day.